Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everyone, welcome into an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I'm your host, Mike Leon. You know, Brian is a seasoned tax attorney based out in Tampa, Florida, and the founder of Tampa Tax Relief. And for more than 25 years, he has helped individuals and business owners across the country resolve serious IRS problems, from audits to tax debts to even cases in the U.S. tax court. Today's episode, we're going to be talking about protecting businesses and your business assets from the IRS. Brian, it's good to see you as always. So let me ask you, when a business owner here, when they start thinking about protecting their assets, what does that actually mean from the standpoint of federal tax enforcement?
Good to see you, Mike. Really, what it means for most people is they think they're in a position of arrears or that they have balances due. Generally speaking, if a business owner doesn't believe they're in that situation, then the IRS may just want clarification on some returns that were filed or maybe returns that are missing. But for those people that know that they're in arrears or have a balance due, their assets really are more about their personal assets. Yes, assets of the business, but most small business owners are owners of an S Corp or an LLC or even a sole proprietorship, which is a flow through. So ultimately, their business debt as it relates to the IRS, for the most part, flows to them. So they're thinking about protecting their personal assets, their personal money and just different possessions.
Brian, where do you most often see business owners sometimes unintentionally, exposing their assets simply through maybe just the way they operate on a day-to-day basis?
Well, really, for most, it's their bank account. I mean, it's very, very hard to have a business nowadays without a bank account. I mean, there's still a few cash type businesses, and I'm not talking about the illegals. I'm talking about legitimate businesses that very few that operate without a bank account. So when people say exposed, they'll say that they use that phraseology. I'm exposed with the way I do business. You and 99.9% of all legitimate business owners are exposed per se because you have a bank account. And obviously the banks are regulated by the federal government. So it ain't hard for the government to find out information about your banking. Let's put it that way.
Right. This isn't The Sopranos, Brian, So let me ask you though, staying on that, how can mixing personal and business finances, especially make certain assets so easy for the IRS to reach during a collection case?
Well, the mixing part oftentimes is where somebody's using maybe just one bank account for both business and personal. But in some ways for businesses, especially businesses that don't have a large number of different customers or clients, if they are getting most of their work through one payment source, it's not difficult for the IRS to just do a look back to see where those payments are going to that business just by looking at the tax ID number and the 1099s that are issued to that business. And so at that point, the IRS can simply reach out to the customer or customers, if you will, that are funding that business and attach that income going to the business.
What about business owners that are listening to this? Maybe they own equipment, they own vehicles, inventory. How does the IRS typically evaluate those assets, especially when they're trying to collect the debt?
Well, really, there's two parts to that. One, is it a type of equipment or vehicle, if you will, or that's used for the business, the tools of the trade, if you will. So if it's automobiles or trucks, is it used for the business, for deliveries or to transport workers or goods? They look at it that way. But also, they look to see if that particular equipment or vehicle is encumbered by any other type of lien. A lot of business owners that find themselves in a tax debt situation with the IRS, oftentimes they're also financing vehicles and equipment. And if that's the case, unless there's a tremendous amount of equity in those vehicles or equipment, the IRS is usually not too quick to want to try to take something like that, because then the IRS is getting mixed up with the lender. And that's kind of just against a public policy standpoint for the IRS.
Brian, I love asking you to share examples without digging obviously too intricate into the details, but can you share a situation where, a business owner, maybe they assumed their assets were protected, but the structure they were using actually made things worse, especially when the IRS got involved?
Well, it was really a payroll tax case, and this was a client that had one source of income from one particular company. And they were in I'll just say kind of a hands-on blue collar type of industry. And they fell way behind long before they ever called me. And the IRS just simply reached out to that particular company that was paying all the monies to what turned out to be my client, and sent them a letter that just said, send all payments to the IRS instead of the taxpayer, for in my case. And as soon as that happened, that's when the client reached out to me and said, "Hey, I need some help because I went from making X amount per month to zero." So that was a case where only having one customer really wasn't advantageous to my client. But again, it's the nature of the business. Some businesses have, like a restaurant, will have hundreds or thousands of different customers in a week. Other businesses are pretty well tied directly to one payment source. But that was a situation where, unfortunately, the taxpayer had waited way too long before that happened. Of course, ultimately, we were able to get that attachment released and get my client back on track.
Brian, a second ago you mentioned about S corps, LLCs. For the owners out there who have maybe multiple entities, they got multiple partners or layered arrangements even. What kind of misunderstandings tend to create problems when the IRS starts asking questions?
Well, oftentimes, if the IRS sees ownership interest in an asset, and let's talk about like a bank account, if they see that that particular taxpayer is a signer on a bank account, sometimes the IRS will just go and take that bank account. They'll seize the funds in it or accounts receivables. And then at that point, you have a taxpayer answering to their partners or layered types of businesses where they have multiple entities. And so the IRS really puts the onus on the taxpayer to kind of unravel and sort it through. And as you might imagine, that can cause, in many cases, irreparable harm to somebody that's in partnership with one or more other people, especially if those other people aren't aware that that person has tax problems.
Mhm.
So it's really a precarious situation. If you are in a layered situation or multiple partners, definitely reach out before it gets to that point where the IRS just comes in and seizes the assets.
Yeah. Brian, in previous episodes, we've also talked about keeping clean records, right? So, how much protection can clean bookkeeping, clear ownership records, all this consistent documentation realistically provide when enforcement is on the table?
Well, it's all about numbers. And so if you are able to show the IRS exactly where your numbers are in a quick and orderly fashion and what situation you may be in, and you may be in a kind of what I call a dry patch where you maybe lose a contract or there's, well, COVID was a classic example for a lot of people, but there's certain uh, storms and things like that that can cause a period of time where a business is really struggling, and having good records can demonstrate to the IRS that, hey, look, I had a good history, not just paying to the IRS what was owed, but also in just maintaining my business. And so, please understand, I'm at a point right now where I might need some time to get back on track. And having those good records in an orderly fashion and presenting it in a good way can go a long way. And because I've said to many clients, mostly in audits, but it applies here, sometimes how you present the information can be as important as the information itself. So it's important that you have it organized and just ready to be sent over to the IRS as needed.
Brian, a second ago, you mentioned the phrase reduce exposure, kind of tongue in cheek. But let me ask you seriously, what kind of legal protections are legitimate for business owners who maybe they do want to reduce their exposure without stepping into anything the IRS would view as abusive or, let's say, even misleading?
Well, I mean, when an individual starts a business and they incorporate, and let's say it's a LLC, limited liability corporation, or a subchapter S, or even a C, forget C corp for a moment, but just a subchapter S, they form an entity and they get a new tax ID number. So payments are usually sent to that business entity and that business tax ID number. And there is not really a quick, clear way for the IRS to tie that very quickly, I should say, to the owner. Eventually, they can sort through it, but there are tens of millions of S corps in this country, on top of 300 million people. So it's not an illegitimate way of doing things. The IRS actually had put forth in the Treasury Department, if you will, through FinCEN, they wanted to be able to have people register every year as to the ownership of S corps and LLCs, and that the courts held that was too much of a violation. But by forming a subchapter S or an LLC in an entity like that, getting a new tax ID number, it does give you some protection, and it's not illegitimate. Um, but it's also the best way to conduct a business, because then you have those bright lines that are drawn so between what is the business and what is personal.
So, Brian, as we put a bow on today's episode, someone's listening to this right now. They've heard you speak. They're unsure whether their assets are vulnerable. What's the first thing that they should evaluate to understand how exposed they truly could be?
Really, it's about looking at the different notices. Most people know when they're in trouble, and I say most. There's a lot of times where a business owner is really good at what they do, and they're very involved in the day-to-day managing of the business, and I mean like the business itself. And they're kind of handing the ball to somebody in an office to sort through all the letters and notices that come in. So you always want to be sure that as a business owner, you're getting the mail. You're the one that's looking at the mail, because as most people know, the IRS really doesn't use email. In some very rare circumstances, they do, but they're not like a bank or finance company that's going to email you a notification. They're going to paper mail it. And so it's important that they stay on top of the mail and not delegate that to somebody else. And by doing that, then they can always stay out in front of things, because, again, there are times where business owners don't realize they're kind of getting in a bad situation. And for those that do know they're getting in a bad situation, believe me, ignoring it, as I say, it ain't going to go away. It's not just going to fix itself. You've got to just step up and at least take a look at what's going on. And obviously, if it's a situation you feel that you can't deal with on your own, then reach out to us. We'll help you.
You're the one grabbing the mail. I love it. Brian, thank you so much for the time, the insights. I appreciate it as always, my friend.
Thank you, Mike.
And that's it for today's episode of the IRS Debt and Audit Podcast. If you want to learn more about Brian's work helping individuals and business owners resolve serious IRS problems, do me a favor right now. Visit tampataxrelief.com. Before you go, don't forget to like, subscribe, leave a review, and comment, or share the episode with someone who needs to hear it. As always, I'm Mike Leon. See everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.